Hello everyone, my name is Abhimanyu and today in this video we are going to talk about the basics of equity investment. Now before we get into the nitty-gritties of valuations like stocks intrinsic value or what do we mean by value investing or growth investing, first we'll talk about what exactly do we mean by investing. Now Benjamin Graham, as we all know, the great father of security analysis, had defined investing as an operation which upon thorough analysis promises safety of principal and an adequate return, and the operations not meeting these requirements are termed as speculative in nature. We must all remember that investing in equities is equivalent to investing in the underlying business, and hence it becomes very imperative for the investors to truly understand the nature of the business, its economic characteristics, and its financial performance. So when I say financial performance, basically one should be well versed with all the financial statements that the companies are supposed to report to the exchanges. For example, statement of cash flows, balance sheet, profit and loss statements, etc. Investing in equities can be broadly categorized as value investing and growth investing. And in this video, we'll be particularly talking about value investing. So what exactly do we mean by value investing? Now, we must have all heard that he's a very good value investor, or the great oracle of Omaha, Mr. Warren Buffett, is considered as the best value investor the world has ever seen, or Seth Klarman for that matter. So what exactly do we mean by value investing? So value investing is defined as an art of appraising the fair value of the underlying business it represents. That is a value a shrewd business is willing to pay for if he buys the entire business, and then buying that business at a discount to that fair value. It is as simple as that. So the fair value of a business, thus we have appraised over this process, is known as the intrinsic value of a business. Now the discount from the fair value is known as the margin of safety. Now this margin of safety plays a very important role in value investing. Why? Because we all know that future is uncertain. No one can predict future, what's going to happen in over a period of time. The promised cash flows from the companies may or may not arrive at the desired point of time, right? So margin of safety plays a very important role in investing. It ensures that the investor gets a decent return, even if he or she makes an error or doesn't consider some factors which are pertinent to business while doing a particular business valuation. It is this concept of margin of safety that enables these value investors to get a superior return over a long term. And margin of safety can be summarized, or maybe it can be termed as buying a dollar for a few cents. So guys, if you are just starting out in stock market, or if you really want to understand the business fundamentals, or if you really want to carry out the fundamental analysis of a particular stock, these are few of the books I have listed down, and I would highly recommend that you first go through these books and understand the concept of investing, value investing, before you buy your first stock. So few of the books which I have written are One Upon Wall Street and Beating the Street by the great Peter Lynch. As we all know, Peter Lynch was a great fund manager for Fidelity Magellan, and he ran this particular fund for 13 years with a CAGR of 29%. Uh, then there's a book called Common Stocks and Uncommon Profits, again by the legendary Philip Fisher. And the way he has explained the basic, the 15 points, the 15-point checklist that he has made for what he looks for in a particular stock. Very much recommended. And then, as we all know, the Intelligent Investor by the great Benjamin Graham himself. So it basically talks about the value analysis part. And then from an Indian context, from Indian perspective, there's a great book by Saurabh Mukherjee. The book name is Coffee Can Investing. And again, I would recommend everyone to read these books before investing in stock markets. So that's all for today, folks. Thank you and have a nice day.